Big news in 2026. Some of the biggest banks in the USA just changed their vital rules, and this could directly affect your money, loans, and savings. From lower capital requirements to new digital banking rules, these changes could either help you or cost you big time. So before you trust your bank blindly, watch this until the very end to protect your financial future. This is a must-watch update for everyone. But before we dive into the details, make sure you subscribe to our channel for the latest financial news and wealth-building strategies. Your support helps us keep you informed. Welcome back. Today, we're breaking down the top 5 major banking rule changes in the USA for 2026 in simple, easy-to-understand language. Whether you live in the United States or invest there from abroad, this is something you absolutely need to know to stay ahead in the global economy. The 2026 financial landscape is shifting rapidly as regulators attempt to balance economic growth with long-term systemic stability. Let's start with change number 1, the relaxing of the capital requirement rule. This is a massive shift for Wall Street and beyond. First big change. Banks are now required to hold less reserve money. In early 2026, U.S. regulators reduced capital requirements by around 4 to 5% for major banks. This decision came after intense lobbying and a re-evaluation of the Basel III Endgame rules, aimed at freeing up trillions in dormant capital. So, what does this mean for you? Primarily, banks can now give out more loans to consumers and businesses, and even increase credit card limits significantly. With more cash on hand, banks are incentivized to invest more aggressively into the economy, potentially lowering interest rates on certain loan products. But here's the major risk. Less reserve means a higher financial risk during unexpected economic crises. The safety net has been trimmed for efficiency. This change is ideal for real estate investors and large-scale borrowers who need easier access to high-volume credit for expansion. Moving on to change number 2, significant relief for small and community banks. This is a win for local main streets across America. The U.S. government introduced new rules specifically designed to reduce the regulatory burden and simplify the daily operations of these smaller institutions. The primary impact is faster loan approvals for locals. Smaller banks no longer have to jump through the same hoops as the massive global giants. This simplifies banking for small businesses, allowing them to secure capital for equipment, inventory, and hiring much more efficiently than before. By lowering the cost of compliance, we're seeing more competition in local banking, which often leads to better service and lower fees for you. This update is ideal for small business owners and local entrepreneurs who rely on personalized, local banking relationships. Change number 3 is all about the digital era. New FDIC sign rules for the apps you use every single day to manage your money. Banks must now follow strictly updated rules for how they display FDIC insurance information on apps, websites, and even at ATMs. The goal here is more transparency. In the past, it was sometimes unclear which accounts were fully protected and which were not during a crisis. Now you'll see clear, standardized protection info for your deposits, ensuring you know exactly where your money is safest during market volatility. This creates a much safer online banking experience, reducing the chances of consumers being misled by fintech companies or non-bank entities. These new display rules are ideal for everyday savers and tech-savvy depositors who do 100% of their banking on a smartphone. Now for the one many have been waiting for. Change number 4. Crypto is officially entering the U.S. banking system in a big way. U.S. regulators have finally established a framework that allows banks to handle stablecoins and other digital assets legally and securely. This means your traditional bank may soon offer crypto custody services, allowing you to hold digital assets alongside your checking account. Digital payments will grow faster than ever as banks use blockchain technology to settle transactions in seconds rather than days. For investors, this opens up massive new opportunities to diversify portfolios within a regulated banking environment like never before. This shift is ideal for digital asset investors and fintech enthusiasts who want the security of a bank with the flexibility of crypto. Finally, change number 5, a fundamental shift in how the government watches over these massive financial institutions. Instead of focusing on every minor compliance detail, regulators are now shifting their focus toward major systemic financial risks only. The result? Banks now face fewer day-to-day restrictions, which proponents argue will lead to much faster innovation in financial products and services. However, critics are concerned that this could lead to less safety oversight, potentially missing small cracks before they become giant systemic craters. It's a move toward efficiency, but it requires banks to be more self-disciplined in their risk management than ever before in history. This regulatory shift is ideal for large institutional investors and high-growth banks looking to expand without excessive red tape. Now, let's do a reality check. This part is crucial to understanding the true impact of these changes on your personal wallet. On one hand, these changes are specifically designed to boost the US economy by increasing lending and liquidity in the global markets. But on the other hand, many financial experts warn that this could increase financial instability if these new freedoms aren't managed properly. To summarize, Rule 1 favors global giants, while Rule 2 supports community banks. Rule 3 improves transparency, while Rule 4 integrates crypto. Rule 5 shifts the focus to systemic risks. Together, these changes represent a massive overhaul of how the US banking system operates in 2026. If you want to stay ahead in finance, hit that like button and support us by commenting and subscribing for more smart updates on your money. I want to hear from you. Comment below. Safe or risky? What do you think about these new 2026 US bank rules? Let's discuss. Remember, the bank is not your friend. Knowledge is. Thanks for watching, and we'll see you in the next financial deep dive.